The Great Australian Dream, a quarter-acre suburban block, a garden, a hills hoist, and a barbecue, providing the foundation for family and social stability. This was 50 years back when the nation was prosperous. The situation today, however, is poor. The Australian government has unveiled a multi-billion-dollar plan to help address the nation's deepening housing crisis, but an ongoing supply crunch suggests cash is unlikely to make much of a dent in the problem. The issue is driven by a unique demographic and a shortage of available residential land near jobs and services. The scarcity of well-located residential land means many homebuyers are missing out on the benefits of city life. This supply has had a major adverse impact on the affordability of housing for low-income families. According to a recent survey by the Australian Bureau of Statistics, Australians on average are spending more than 30% of their gross income on rents, and this number rises further when we consider those with a low income. The issue is becoming too serious to ignore. In this video, we'll cover what's causing the overpriced housing prices and the effects it's having on Australia. There is a strong demand and tight supply of housing in the country. This means that there are more people looking for homes than there is real estate available. This is driving up prices and making it harder for people to find affordable homes. So why is this happening? There are a few factors at play. Firstly, there's been a huge surge in net overseas migration, which is increasing the demand. Additionally, favorable demographics and evolving living preferences are also contributing to the rise in demand. On the other hand, high interest rates, issues in the residential construction industry, and rising costs and construction delays are making it harder for developers to keep up with the growing demand, which is worsening the issue and adding strain to an already tight rental market. Australia's housing market has long been a topic of interest and concern for its citizens and policymakers due to its significant impact on the country's economy. In recent months, the hiking home prices have dominated headlines, defying expectations. The obsession with property ownership in the island nation is not new. It can be traced back to the 1950s, where owning a family home was synonymous with wealth and security. In the early 2000s, the property market set off on a phenomenal growth trajectory, particularly in major cities like Sydney, Melbourne, and Brisbane. House prices surged with an average increase of 5% between 1996 and 2010, and another 5% between 2012 and 2017. This growth trend was bolstered after 2019. As a result, the demand naturally increased, but the supply is not there. The population in Australia has grown by over 30% in the past 2 decades, reaching 25 million. High net immigration rates since the mid-2000s have increased demand for housing. Despite the population growth, the rate of home building hasn't kept up, especially for apartments and rental units. A shortage of suitable land for residential buildings has constrained supply. Slow changes to planning laws and shortages of building materials have driven up construction costs. Labor constraints have worsened in recent years due to travel restrictions affecting overseas workers. Low interest rates have also increased the demand for housing. Before the recent rate hikes, interest rates had also been declining since the 1980s, making credit more accessible. In 2019, interest rates on mortgages dropped to 2%. Generous tax concessions on property investment, including negative gearing and capital gains tax exemptions, have encouraged property investment and driven up demand. Various government initiatives, such as first home buyer grants, have aimed to assist first-time homebuyers. However, these grants have inflated the prices. The Australian market is often regarded as one of the most expensive in the world. Cities like Sydney and Melbourne frequently feature among the least affordable housing markets globally, alongside cities in the United States, Asia, and Canada. One key measure of affordability is the household debt-to-income ratio. Australia's ratio stands at 200%, more than double that of the United States' 100%, and significantly higher than the United Kingdom and Japan's ratios. The Demographia International's Housing Affordability Report found that all 5 of Australia's major property markets, Sydney, Melbourne, Brisbane, Adelaide, and Perth, have been severely unaffordable since the turn of the millennium. The report used the median multiple to rate affordability. It is the market's median house price divided by the gross median household income. Anything over 5 is severely unaffordable. Sydney's median home price is 15 times more than the average household income, only beaten by Hong Kong, which is a considerable 23 times the collective annual take-home. The International Monetary Fund's Global Housing Watch has Australia ranked as the 3rd least affordable place in the world to buy a house, behind only Belgium and Canada. Sydney has shown the highest rise in house prices, reporting a rise of 5% every single quarter, with the median house price now being $1.5 million. Melbourne, on the other hand, trails behind at 12 times the average household income. Its house prices fell over much of 2022 but are still higher than it was in 2019 and have risen again. Over the last decade, its home price growth was stronger than unit growth, but that wasn't always the case. The median Melbourne house price has increased by 8% and the median Melbourne unit price has increased by 7.5%. These skyrocketing prices of real estate have made home ownership a far-fetched dream for many. So what does all this bad news mean for the ordinary Aussie and the overall Australian economy? It means that mortgage default is a significant issue with many households struggling to keep up with their payments. The statistics show that a significant number of mortgage holders are at risk of mortgage default, and Australia has the highest level in the entire developed world. Borrowers have been floored by a series of rate hikes by the Reserve Bank of Australia starting in May last year and continuing for 8 months in a row until December 2022 when the International Monetary Fund compiled its figures. The increased cost of borrowing has left the country at the top of the league for debt, with Canada closely following. A record 1.5 million people, almost one-third of all holders, are now considered at risk of stress across the country as interest rate hikes continue to bite. The number of people at a high risk of mortgage default has increased to just over 1 million. This represents more than 20% of all mortgage holders, and it is significantly higher than the long-term average over the last 15 years. According to new research by Roy Morgan, such people are considered to be at risk if they are spending between 25 and 45% of their household income on their home loan. The study also revealed that if the Reserve Bank raises interest rates again, the risk will increase even further. Australia's economy heavily relies on its housing market. The consequences of interest rate hikes, insufficient supply, and the nation's dependence on the real estate sector are driving rental costs to record highs, causing a surge in homelessness and bringing about considerable distress. The central banks around the world have attempted to deploy quantitative easing or money printing as a means of preventing recession and deflation in their countries. While this policy is effective at lowering interest rates and boosting the stock market, its exact impact on the economy remains somewhat unclear, but it is known to favor those who borrow and invest. In Australia, inflation stands at 7%, with rental increases accounting for a substantial 20% of this figure. Each time the Reserve Bank of Australia increases the cash rate's interest rate, it pushes rental prices up across the entire country. The country's economic health is closely intertwined with its property market and the steady stream of new arrivals into the country who invest large amounts of capital in establishing themselves. However, this reliance on the property market carries risks. A housing and banking bust is a potential outcome, as witnessed in other nations like Japan, the United States, and Spain in recent decades. Remarkably, Australia's housing and credit bubble is even worse than the ones that eventually burst in the other countries. In addition, the shortage of available housing combined with a surplus of capital seeking real estate investments has created a situation that would lead to widespread inflation. This has been a persistent issue in the property market for several years, with banks lending trillions of dollars in loans to property investors. If left unchecked, this trend will further amplify the crisis and lead to broader economic instability. This housing crisis in Australia is leading to rising homelessness, poor housing conditions, high levels of unaffordability, and high financial stress on the people. Homelessness is a pressing issue, and the housing crisis plays a pivotal role in intensifying this problem. According to a report from Homelessness Australia, the housing crisis and the escalating financial burdens it brings with it are forcing over 1,600 individuals out of their shelters each month, with a rising demand for related services. The report reveals that between December 2022 and March 2023, the need for such services surged by 7.5% nationwide due to skyrocketing rents and historically low vacancy rates. During this period, an additional 6,600 people sought assistance, with women and children constituting 74% of those seeking support. The number of people experiencing it has been steadily increasing since 2006, with an estimated 122,000 individuals counted as homeless during the 2021 census. Vulnerable groups including refugees, children, people with disabilities, older adults, and Indigenous communities face particularly challenging circumstances. In 2021, children under the age of 12 accounted for 15% of the homeless population. Indigenous Australians make up a large chunk of this, with almost 1 in 5 individuals being of Aboriginal and Torres Islander descent. The supply is so limited that even those with high income struggle to secure a place to live. The cumulative effect of rising interest rates has placed a significant burden on broad sections of the working class as their monthly mortgage payments continue to rise, intensifying the crisis further. As the island nation fights with this issue, the world has some lessons lessons to learn. Some of them being that addressing supply issues is important to prevent a shortage of affordable housing and rising rental costs. The market must be regulated to prevent speculative investment that drives up prices. Over-reliance on one industry leads to instability and economic downturns. A balanced approach to growth that does not rely too heavily on one industry is necessary for long-term stability. What happens in the Australian housing market is a developing story, and we'll soon have enough data to know what actually happens. To learn more about the economic challenges faced by Australia, check this video over here. And if this video brought value to you, please consider liking and subscribing. Thanks for watching.